is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Thursday morning, 9:06 a.m. We got about 24 minutes to go until the start of trading. Yet again, folks, we got markets in positive territory to kick things off. You're looking at an S&P positive by 13 points, trading at 45.34 right now. NASDAQ positive by 46, Dow positive by 100. Jumping over to commodities right now, we have Bitcoin. We'll call it a commodity, a currency, up 1,800, back above 50,000. Quite a pop for Bitcoin there. You got gold off $1 so far this morning. Gold just kind of chopping around all week between about 18.10 and 18.20. Gold trading it right in the middle of that range at 18.14.30 right now. You got silver off 11 cents at 24.11. Excuse me. Jumping into notes and bonds, the 10-year right now up about 4 ticks. We're trading at 133.18. You have the 30-year up 8 ticks at 163.16. This about 24 hours ahead of non-farm payroll Friday, coming to us tomorrow before the long weekend kicks off. We jump over to the volatility index this morning, under 16 yet again. We reached 1568 yesterday. A little bit of a sell-off to end the day yesterday. We come into today with a 15 handle yet again. Taking a look at the S&Ps for yesterday's action. Yesterday, we were trading at 45.35 at about 130. You drop about 15 points coming into the close. Tech stocks accelerating lower as well late in the afternoon. You were up there to about 15,680, we'll call it, chopping around for most of the day. Excuse me, from about 1:30 on, you trade lower about 75 points, nothing too substantial. Right now, we're right in the middle of that range in terms of where we were yesterday in the NASDAQ 100. All right, jumping right into it in terms of the jobless number this morning. Jobless claims, should not say jobless number, jobless claims, initial jobless claims, 340,000. Lowest level since March of 2020. We're going all the way back basically to pre-pandemic levels. That was the first week that things started to creep in. I think the next numbers were like in the millions or something like that. Do they got it? Yes, they sure do. Initial claims. This is just for 2021. You can see the drop-off, though. Slight miss of what they were looking for. I think the number was 345, as in they beat in terms of a 5,000 number less. The thing I get into and I say every time we have these numbers, folks, 5,000 jobs on an initial jobless claims number is pretty meaningless in the grand scheme of things, and that's why you're seeing no real reaction across the board on these numbers. We'll see what non-farm payroll brings tomorrow. That's after ADP with a little bit of a miss yesterday, but ADP had quite a miss when you go back to the July numbers as well. Tomorrow we'll be seeing the August numbers, remarkable, with September 2nd, folks. September 2nd. We got Labor Day coming up on Monday, and then the summer pretty much over. Kids in school kids in Florida have been in school for 2-3 weeks. Florida, they're scheduled just a little bit off from people, most people across the country, I'd say, starting school after Labor Day. I know in the Northeast, Boston, etc., starting schools up there after Labor Day. So this kind of the final weekend. Already talking to friends and family. The roads today a little bit bare, more bare at least, less traffic than usual. The long weekend maybe already kicking off Thursday. We are in a different world now. A lot of people have the ability to work from home, at least occasionally, right? I imagine those occasional days, they're going to fall heavily on the Thursdays and Fridays, especially coming into long weekends like Labor Day or Memorial Day, the big ones out there for sure. All right, jumping around to what else we got going on this morning. We talked about jobless claims. New York, tough deal over in New York. Some sad stories coming out there. The rain, let alone, but just loss of life, unfortunately. You got at least 8 dead with a toddler among those. The sites coming out of New York say some prayers and some thoughts for the people up there that they stay safe, because just remarkable images in New York in terms of what we're dealing with. And it is really remarkable, folks, in the days of, all the climate change talk. We just had a storm go from New Orleans to New York over land, and it has the potential to punish one of the greatest cities the world's ever known, New York City. Not sure that, should be possible with the amount of wealth our country has. hopefully some of that infrastructure money shores up some of these stories, because just unfortunate in a city like New York City with so much money floating around that they can't handle rain, which is one of the most fundamental things you got to be able to handle, especially as we go forward, folks. These things are going to continue to happen. We got to spend the money. Hopefully it's in there, because the money that they're going to have to spend right now, the damage that you see happening, I mean, the subways, the images of the subways should just not be happening in a city like New York City with the amount of money that they got floating around. All right, let's just jump right into it in terms of companies already moving this morning with their numbers. We'll start off with a little retail. We'll start off with Land's End. Land's End beat by 6 cents, quarterly earnings of 48 cents, revenue above estimates as well, but here's the disclaimer. However, the company said its profit margins would moderate in the back half of the fiscal year due to supply chain challenges. Now, here's the interesting part, right? A lot of times that's going to be real. CEOs have this like get out of jail free card if they can convince the market that no matter what's going to happen, folks, you're going to hear it's about, whether it's about supply chain challenges, whether it's about finding workers, right? Whether it's about all of the excuses they could be using, but there's a lot of retailers that are just crushing it right now. And I imagine when you have to guide down, you have a lot of excuses that you can try and spin right now. Nonetheless, even if it's real or not in terms of being a supply chain issue, the market does not like to hear that. There's Land's End. They're down a little bit today. You take a look at the daily. This thing's been chopping around. We start off March going back 2 quarters ago. You trade from 40 down to almost 20. You get it all back to 44, and this morning we're going to open about 32. Now, keep your eye on the low we had. I was looking at this earlier. You back it up to June, we're looking at a low of about $30, okay, from the run from 20 to 44. Now, it's interesting here. You throw a Fibonacci on here, and we're coming right back to that 50%. You make it back to the 618, and you're approaching right down to the 618, 29.75, and we had a low there of 30.27 within about 50 cents of that price point for Land's End. All right, Hormel, the food maker. It's HRL? Yes, HRL. They're out with their numbers as well, a little bit slower, lower in the pre-market. They're going to open at about 44. So you see they're coming down to an area that we were at kind of right in the beginning of the year. Hormel down to 43.45. We got a bid this morning of 43.92. Their numbers, adjusted quarterly earnings, 39 cents a share, matching forecast, revenue coming in above estimates. Watch out for that word, however. However, Hormel gave a weaker than expected full-year outlook, noting the impact of higher cost, although it said price hikes and cost cuts should help its margins moving forward. The however, folks, there's your however there. There's your however down here in their estimations of going forward. That seems to be a little bit of a trend in the market, not really caring just yet as we proceed to higher prices across the board right now on a pretty consistent basis. Signet Jewelers, they are trading higher today. Let's look at this one as well. $3.57 a share. How about they beat $1.69? Revenue exceeds as well. Now, comp store sales are just silly because they weren't doing any business a year ago. Nobody was rushing into a Signet Jewelers in the previous 3 months of 2020. Comp store sales surging 97%. Market was looking for 79.2. Both of them pretty meaningless numbers. Raise the full year outlook. There you go, though, folks. It's all about what you're going to do for me in the future. You heard the last two in terms of what you did for me in the past, what you did for me in the future. Signet, they're going to open above the highs that we had on June. You're going to open at $87. You back this up to a 3-year weekly to see the full collapse it had to $5. Jewelry stores potentially going out of business in the middle of the COVID pandemic. Well, how about being an 18-bagger up to about $90 off those lows this morning? I think that's going to be an all-time high, is it? Oh, no, not quite. 152. Watch out. Stay tuned, folks. We'll be right back.
Golden ratios give shape to everything in our world. Represented in the Fibonacci sequence, these special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We got a chart of American Eagle up here. We're down more than 10% this morning and down about 12.5%, trading down $3.80. Closed yesterday at 30. You're trading at 26.20. Their earnings jumping into an American Eagle. Tough numbers when you look at it up and down. So shares drop after revenue falls short. E-commerce sales slow from last year. They didn't decelerate, folks. I guess you could say they decelerated. Yeah, I guess so. They're below those levels. That would be the word. Getting into the numbers, so they make 60 cents versus 55. They miss on revenue. You've seen the amount of companies that at least are beating in the current quarter, right? American Eagle can't even keep up with current quarter estimates, missing on revenue. They get into it. Revenue grew 35% to $1.19 billion from $883.5 a year ago. Digital sales, though, falling 5% from 2020 levels. So growth was not decelerating. Literal sales were decreasing, right? That wouldn't be a deceleration because they're not accelerating. They're decreasing. Digital sales fell 5% from 2020 levels. They're not even growing. They're shrinking from 2020. Last summer, many consumers obviously opting to shop online. Digital revenue jumped 66% on a 2-year basis. Well, that's great, but I say it often, folks. Percentages on very small numbers can sometimes be deceiving. If they were doing $10,000 of digital revenue in 2019, and I'm sure they weren't. I'm sure they were doing millions. Maybe they weren't doing millions. I don't know. I'm sure they were doing millions. But point being, if they were doing $10,000 in numbers in 2019, they'd only have to be doing about $17,000 in numbers in 2021 to show 70% growth. You get the point. Sometimes they can be deceiving. You're still dealing with small numbers when you use percentages off of small numbers. Not what you want to see, that they can't even keep up with digital sales growth of the levels they had last year. Understandable in terms of everyone flocking online, but a lot of companies in the retail sector not shrinking from those numbers. Definitely a deceleration of growth, okay? But they got to replace that word. E-commerce business decreased, not decelerated, decreased compared to the prior year, dropping 5%. Not what you want to see in terms of decreasing numbers in a big way. American Eagle going to pay the price, opening more than 10% down this morning. All right, jumping around to what else? A couple articles here caught my eye talking about bonds, notes, yields, etc. First one out here, this is an opinion piece, I guess. Yeah, of course it is, because they're saying traditional 60-40 portfolio has actually reached its expiration date. Quite an opinion there for sure. Not fact in any way, but it might be an opinion based on some solid foundations in terms of traditionally, right? You'd have 60-40 stock to bond portfolio. Now, what you get into here, when you're dealing with inflation, I mean, some interesting stats I just want to bring up. If you're dealing with modest inflation at 3%, now the Fed's goal is 2%, okay? But we all know that they might run a little hot. If you, just to demonstrate how quickly inflation can erode money, 3% inflation, doesn't seem that staggering, right? Say, if I get 100 grand in the bank, 3% inflation, what am I losing? Three grand a year. I still get 97 grand in the bank. Yeah, that's unfortunate, but not the end of the world. Well, how about you wait 24 years and you got half of that, half of it. Even modest inflation at 3% annually halves the value of money in 24 years. That's a tough one, folks. And they just get into, whether it's you're talking about, and how about this stack? Stocks have soared 360% in the last 10 years. It's been quite a 10 years, folks, averaging more than 16% per year. You're going to beat inflation, at least at this time, during those numbers. Quite the number indeed that you get into when you're dealing with 16% a year in stocks and you have inflation at under 2%. And they get into it further. When you're talking about Treasuries guaranteed to earn a full 1% less than the inflation over the coming decade, investors are going to start to get a little creative in terms of what they do. About 20 years ago, Treasuries rallied 31% and the aggregate index rose 18% as equities fell 49% during the internet bubble collapse. At the start of the pandemic last year, stocks dropped 34%, but Treasuries gained just 5%, and the aggregate index actually lost 3%. All right, now wrap your head around that again, because this is a big one, and this is how things were supposed to work for portfolio diversification using bonds. 20 years ago, Treasuries rallied 31%. Did you hear that? 31% during the internet bubble collapse. Treasuries rallied 31%. Treasuries gained just 5% when we had the pandemic last year. Quite a different scenario, folks, when you're dealing with such low interest rates in a big way. Now, what's interesting is you go from that to Bill Gross out there saying bonds are investment garbage amid low yields. Something you want to think about. Now, this is a more of a long-term portfolio analysis type risk portfolio, right? These are not short-term trader questions that we're dealing with. These are portfolio investment diversification questions. But if you have a portion of your portfolio for retirement investments, it's something you want to think about, because they even talk about in here, and just get down to it, because I think they talk about, oh, come on, shame on me. Maybe it was back in the last article. I'll have to pull it up at the break. But no, it is going to be this one. Here we go. 10-year yields are at about 1.29% right now. And Bill Gross was talking about they're likely to climb to 2% over the next 12 months. That's his take, okay? But that would hand investors a loss of roughly 3%. That's what he's talking about. It's like if you see rising yields from where we're at pretty staggering low levels. We're dealing with inflation that's at least arguably pretty high when you're investing in a 10-year and losing 1% a year in real money terms. And you're talking about buying something that used to be a safe haven. Not a lot of people understand that you could invest in something like bonds and lose money to the tune of 3% by the year end or that or thereabouts. Again, just fodder to make you think. But he says cash has been trash for a long time, but there are now new contenders, said Gross. Intermediate to long-term bonds are in that trash receptacle for sure. But will stocks follow? Earnings growth had better be double-digit plus, or they could join the garbage truck. I tend to agree with at least considering some of what he lays out there when you consider the possibilities, risk reward, higher, lower. I mean, are we really going to accelerate to lower interest rates to the tune of 1% or 0.5% in the immediate future, or is the potential to rise to 2 to 2.5% at a time when inflation is allowed to creep above 2%? Something to keep your eye on in a big way. All right, As we come into the open here, we got about 1 minute left until we go to our break. We'll come back for the open. Apple. We'll talk a little Apple when we get back. Talk about a rocket ship. We got the NASDAQ 100 up 51 points right now. We got Apple. Apple, just yesterday alone, you traded up almost $3 from 152 at the close of Tuesday. You hit 154.98. You finished the day right where it almost opened as the stock sold off a bit. Today, we're up $1.30 right now, and I talk about it all the time, folks. You pull up the fundamentals of this company, and we're talking about a company with 16.5 billion shares. Today alone, you're going to open territory and add about $20 billion in market cap for this company. Apple, though, seems like they're trying to meander the way here. Oh, did I lose you? Potentially? Maybe I'm live, hopefully. Okay, but we'll talk about it when we get back from the break. They're going to talk about payments, and they're going to talk about poor connection. Oh, bummer. All right, we're going to take a break, folks. We'll be talking some Apple. We'll be talking the opening bell when we get back. Stay tuned.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open and we got markets rising in the opening bell. S&P's up 16 points right now. NASDAQ up 63. The Dow up 144 points. Look at the acceleration just since we were in the overnight session. You were down at 35,225. The Dow has added 200 points since about 10 o'clock last night. The Russell positive by 7 as well. The Russell, I mean, since about a week ago, you're talking about 2206 late Thursday in the Russell. We're up approaching 2,300 right now. The Russell, you're talking about within reach yet again. I mean, maybe not today, but it's been a while. You got to go back to basically about a couple months ago, July 6th, since you were up at these levels in the Russell, all-time highs. You got to go back to March 15th of 2366. You're only about 70 points away from that level right now in the Russell. And man, when the Russell gets going, it can move. I mean, just back things up to the bar we had August 27th. You're talking about a bar of 76 points alone. So in that regard, somewhat within reach, potentially, of those all-time highs in the Russell. All right, let's jump to crude, catching a little bit of a bid. Approaching $70, crude $69.87. Crude, quite the acceleration. November, you're trading at $33.64. You drive up to a high of $76.98. You'll pull back approaching the 382. You don't get quite down there. I think we had a low 61.82, 61.74. But since then, we've bounced dramatically. We're up near $70 now. Crude, excuse me, OPEC Plus approves the planned output hike. So pretty much expectations in terms of what they're doing here. Following a swift meeting on Wednesday, ministers from the Organization of Petroleum Exporting Countries, otherwise known as OPEC, and its allies ratified a 400,000 barrel a day increase scheduled for October. In the U.S., the government report showed a further contraction in nationwide crude inventories. Buyers of crude must like that with price appreciation, while the nation's oil infrastructure continues to grapple with Hurricane Ida's impact, whether it's in the Gulf, whether it's in the Panhandle, the people in New Orleans, etc., now hitting areas in the Northeast as well. More oil. OPEC Plus Alliance agrees to bring back additional barrels for October. So you see the output likely to increase as group agrees to return supply. They had the cuts going on in a big way, but continuing to increase that, but steadily in a big way. Rallied about 40% this year as they talk about for crude and continuing higher in a big way. We're talking about, I mean, look at this when you put it on a 5-minute. There's an acceleration for you. From yesterday, we were approaching almost $67. Now, where were we? We were talking to our man, Teddy Kegstad. He is a crude bull in a big way. You look at where we were up almost $2 from that price point just in the last 24 hours alone. Okay, jumping around to what else we got going on. Let's take a quick look at some of the FANG stocks as we open up today. We got the NASDAQ 100 up 64 points. Amazon up another 0.7%. Is that right? Yes, trading at 35.02 this morning. We'll jump to Apple, as I mentioned. Now, this is what's interesting. Let's get back to the Apple story. Apple's up 1.1%. Story out there is that Apple's going to let certain apps guide users to websites to make payments. One of the big beefs that many companies had was not that if you paid for the service through the App Store, the Apple Store, it was that they couldn't even direct people to their own website. That was the big beef that kind of made a lot of reasonable sense. That companies would say, hey, I understand that if people are paying for that service as a result of finding us through the Apple App Store, that you're going to take your cut. But there's people that are just, you have to find the app almost there. And we offer payment services through our own portals, but they're forced to use Apple's, and then you're forcing us to give you 30%. Well, they're not going to do that anymore. The rule does not apply, though, to all transactions. Game-oriented in-app purchases will still need to use Apple's payment system. But so-called reader apps that link to content subscriptions, which is many, all right? You're talking about Netflix, you're talking about whether it's media organizations, right? You subscribe to anything like that, can now offer a service without offering a subscription handled through Apple. They had previously forbid app makers from directing users to subscribe through a website, for example, to sign up for a service like Spotify or Netflix. Instead, developers were directed to Apple's own billing, which takes between a 15 to 30% cut of all gross sales. Many companies can't even operate without a 15 to 30% margin. And if you sell the product through the App Store, there's your margin. It's all gone. So as they say, it does not count for game-oriented in-app purchases. It applies to reader apps. And I imagine they're just getting ahead of antitrust concerns, folks. It is a big deal over there. They're going to say, of course, they're not. They did say that this decision was made in part as part of a settlement with the Japan Fair Trade Commission, but that it was applying the new rule globally, and it should say, that way we try and slow down the regulators in the U.S. and in Europe. That's what it should say in the end, if you were saying it. But Apple catching a bit up 1.4%. My goodness, it just does not stop. For that stock to be up continually 1 to 2% when you're dealing with the market caps you're dealing with, just remarkable. Let's see how Microsoft's doing this morning. Microsoft up about 0.3%. Google shares down 0.2%. What's going on there? Facebook shares down 0.7%. Netflix shares up 2%. I wonder if that's factoring into that what I'm talking about. I mean, Netflix should benefit greatly from that in terms of not having to pay the cut completely. To Apple, they're up 2.2%. Let's see if Disney's popping a bit, up about 0.8%, 0.9%. Disney's been on quite a low pop. If you listen to the program, you know I've been a Disney bull. Disney climbing up. We got a couple highs here. It's creeping up too. We got a high going back to July 14th. 186.29. You also have the high that it was at 187.58. So between 186 and change, 187 and change. That's also correlating to some of the highs you had back here. 190 was an area that it chopped around for a bit, did get up to 203. You see, chopping around on that 382 for a while at about 170. But man, just in the last, from August 20th, you're up from a price point of 172. You're up $13 over that time to 185.06. Maybe the market getting a little bit ahead of what's going on in terms of the pain that Disney's been in with the parks, with the movie theaters, etc. Capitalizing off of that pain by growing Disney Plus. Story comes out, I think it was last Thursday or Friday. I think that might be the acceleration day, August 27th, talking about potentially licensing the ESPN brand for $3 billion plus an obligation to spend money back to Disney for advertising purposes. They have a lot going on, folks. That's the reason why I'm a big investor in Disney, where I got them in my newsletter. And yeah, it's been a struggle recently with this equity. I mean, we're basically flat to positive on the year when the market's up about 20%. But long term, I see this thing climbing well above the highs of 203. You come into COVID at a price level of about 153. And yes, they've paid quite a price over the last 18 months for this equity. But you could never grow the company that they have for Disney Plus streaming in any other world outside of COVID, folks. Talk about perfect timing. They launched their Disney Plus streaming service, I think, in November. And within 3 months, the globe saw a pandemic that we haven't seen in my lifetime. Think about that. They launched a streaming service literally within 3 to 4 months of lockdowns occurring. I mean, timing can be everything sometimes, folks. You know, if they were just late to that party by a year or two, think about that. They would have missed all that potential. And I imagine the executives may have tried to ramp up that timetable, but still, you know, their lofty expectations coming into Disney Plus, nothing compared to the numbers they've put up. You're above those price levels, but I imagine that once this company gets repaired for the parks and the movie theaters, which will happen, folks, amusement parks and movie theaters will be a part of our future when we get over this hump. Disney catching a little bit of a bid today, but Netflix, watch out, man. Netflix, look at that run. All-time highs this week. Netflix, there you go. We just made an all-time high. We're back to 589, and that's a breakout area, folks. Look at these 3 bars that we just had on a weekly basis. Netflix just plowing from 512 up to 589 today, breaking above this consolidation. Netflix trading higher. Stay tuned, folks. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the S&Ps right now up about 18 points. NASDAQ 100 up 52. Jumping into a 5-minute chart, you see the indices. S&P bumping up right where we were Tuesday early in the market. 45.42. We're trading at 45.39 right now. NASDAQ 100 not quite up to the highs we had yesterday. Taking a look at the indices, the Dow not quite up to the highs we had as well. And the Russell above those price levels. Russell rises to 2297.50 in the pre-market. All right, jumping around to what else we got going on. Checking back to some of the stocks that are moving today. Five Below out with their numbers. Discount retailer, not what you were looking for. We talked about the retailer Land's End in terms of trading lower. Signet was higher. Chewy we'll get into as well, but let's finish it up with Five Below. Discount retailer, let's see how they're trading. They were dramatically lower pre-market when I was taking a look. 5 is their symbol. There you go. Not quite catching a bid. You're down 9% for that equity. Discount retailer. Now, what are their brands again? I forget. Let me see. I pulled this up earlier. I think they got. Yeah, I forget the name. Maybe that is. It's for teen, preteen customer, assortment of products, including select brands, licensing, etc. This company you're talking about here is a $11 billion company after it trades lower. When take a look at the 3-year weekly. Man, some of these companies from 47 to 237, and just like that, you give back $40, you're approaching down 20%, and I imagine this thing is on its way to 180. You see the consolidation we've been in for most of the part of 2020, got a little bit of ahead of itself. They beat by 4 cents, $1.15, revenue shy of forecast, and it's not giving sales or earnings guidance for the full year due to uncertainty surrounding COVID-19. Yeah, I wouldn't be touching that stock, folks. All right, if you're an executive and you live or die your equity and you're seeing what's going on, there's no reason you should have that much volatility that you can't give any guidance for the year. You could underpromise and overdeliver in terms of giving guidance on the short side in terms of expectations, but to give no guidance at all when we're a year and a half into this pandemic. And yes, okay, there's volatile times, and to give them a little credence, nobody really imagined that Florida or the country at this point would be dealing with the cases that we are right now. But no guidance is just not acceptable from executives. They either aren't able to do their job, or they're trying to hide the fact that they're worried about the future. That's my take when you get that happening, because a great executive on their company would not be lost as to what kind of guidance they might be looking at for the year. Now, yes, there would be volatility, but we're far past the area that executives should be excused for giving guidance when we're coming into the end of 2021 almost at this point. All right, getting back to Chewy, talking about missing. Let's see how they're trading on the open. They were down about 10% pre-market. Chewy down 8.5%. There's the longer-term chart. We were up to 120 early in the market from $20. Early in the year from $20 last year. We just were almost at 100 at 97.74. Just like that, you get back 20% on this equity. We're down 9% today. There's the acceleration on the earnings last night. You get a little bit of a pop on the open. But same thing with Chewy here, getting into it. Adjusted loss of 4 cents a share. Okay, now the market was saying, twice as wide as analysts had anticipated. Well, that means that they were supposed to lose 2 cents a share and they lost 4 cents a share. Pretty close. Higher than usual level of out-of-stock products. They got tough time with supply. And the company issued a weaker than expected outlook. So not what you want to hear. Outlook miss, revenue miss. They're having trouble with supply as they're out of products. And Chewy, backing things out again, lower to the tune of about 8.5% today. We'll jump around to some of the other equities we take a look at. Tesla shares flat this morning. Zoom shares basically flat as well after trading lower earlier in the week on their earnings. We do have some Zoom in my newsletter. 291.16 right now. Yesterday, you get a little bit of a pop on the news that Cathie Wood was in there buying for ARK. Always nice to see some real money in terms of whether it's, the Fidelities of the world. Now you get the Cathie Woods of the world. Able to influence markets, and she's got plenty of it, folks. I think she put $50-60 million into Zoom on the pain that it saw on Tuesday. But guess what? The market, not really buying it yesterday, unfortunately. You're up to 298, and you give it all back plus some and actually finish below the open on Zoom yesterday. Zoom, though, strong equity in a big way. You put this thing on a longer-term chart. You break out a year ago from that price level about 300, you're right back to this. I mean, yeah, you could make a run down to the low of 273.20, totally within the realm of things when you were back there in May. But they're a profitable company, they're a growth company, and they are a great company indeed. And it's not bad when you get a haircut to the tune of 16 or 17% yesterday in that equity, Tuesday, in that equity. All right, continuing to jump around to what we got going on. Ciena. Network equipment maker, 92 cents a share. The estimate was 13. Revenue beat estimates as well. Robust demand. They announced the acquisition of AT&T's Viata virtual routing and switching technology. They are positive. Let's see if they're hanging on to those gains as we open. Ooh, they give it back. Always interesting. Look at that action. They give it back actually on the conference call that began before the market. Not sure what they had to say, but the market didn't like it. And you're going to open basically flat on Ciena. Not open. You are open, but positive by about 9/10 for Ciena. All right, let's take a look at these indices and see where we're trading on a longer-term basis as we come into the long weekend. S&P, interesting action. When I look at the S&P, you're right in the middle of that trading range. Now, there's a couple things going on here. You back it up to the longer term, okay? And you're in the well-defined channel line, okay? But what I started looking at just recently is that when you go from about May 14th or so, you take that bottom line, the bottoms line up perfectly, right? But the tops are also forming quite a little channel line here, right? We could be in a channel within a channel potentially, and that would mean we'd potentially be bumping up against the upper boundary line there. And again, not an art, just a science, folks. It's something that I keep in mind. These highs correlating all the way going back, that would bring the S&P up to about 4660. All right, but there's a potential. When you look at this shorter term time frame we've had since May, now it's remarkable, folks. Since May, the S&Ps have added, is it 500 on the dot? It sure is. It's 510 points in the S&Ps from May alone. All right, not surprising, you might be bumping up against an upper boundary line there. The lower boundary line, we're still only talking about potentially 44.50, 44.25. You're only talking about where we were trading August 23rd, that or thereabouts. Jump over to the NASDAQ. The NASDAQ, you back things up to where we were in September. Now, for just a full context of where we're drawing this, all right, this really gets taken from the acceleration in November. Okay, the highs correlating back to the high in September of last year. So you have a year in this chart. September of last year matches up to the high from February of last year. We come close to those levels on a couple occasions, and now we've actually risen above that level. I mean, folks, we're talking about, what are we dealing with for, I wanted to see I know I can figure it out. What are we dealing with for a grade here? All right, it's a very inclined line was going to be the point. And if you're telling me that, man, if you told me in September and in February of this year, that this channel line, that we're going to break above this channel line that we just started forming from September to February, and we're going to do it all the way late in the year, I would have said to you, well, wait a second. In February, we're trading at under 14,000. If you're telling me we keep at the same level of growth on this channel line, and you're telling me we're going to break it late in the year, you're going to be approaching 16,000 in the NASDAQ 100, and we're only trading at 14,000 right now. And that is what's happening, folks. You're trading at 15,669. You're bumping up against the upper boundary line. We'll take a look at the Dow as well. Dow, a little bit of a different scenario. Maybe we could be on the lower boundary portion with some room to run to the upside, and the Russell's its own animal, caught a little bit of a consolidation. We'll take a look at the Dow when we get back. Stay tuned, folks. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We have the S&P's up 16 points, NASDAQ 100 up 47. A little bit of a pullback in the market, but still sitting basically right near the highs we have of the session. I got a chart of the Dow up here. And as I mentioned, so we take a look. S&P's, right? I talked about right in the middle of that trading range, potentially. Potentially you have the channel line that we're bumping up against the boundary line, but that would only be from about May. You take a look at the NASDAQ 100. Potentially reaching the upper boundary line there, but the Dow, a little bit of a different story. When you back things up to November of last year, now here's the only difference is that you can't come off the lows of November, which is what would distort this channel line, all right? You really got to come off really from February, finding that low, but the top's pretty much correlating to the top we had November 9th. that could be bumping up to the lower boundary. Maybe we see a little bit of a rotation of a pullback in tech stocks with the Dow popping a bit. But we'll see. I mean, one of the things that lines up with that is you take a look at Google. We had a question in the den talking about Google. Is Google in legal trouble? And I joked, only if they're not in legal trouble. The only trouble they have is trying to figure out where to put all the money they're making, folks. I have kid. Of course, they do have some antitrust concerns. I mean, Google has a monopoly. I agree with it. They're still going to have YouTube no matter what, though, folks. And YouTube, the content they deliver, the advertising they're able to deliver, this company is going to take it in stride. Now, with that said, you back things up to last year, pretty well-defined channel line from Google. You trade from a price point of $1,400 to $2,900. But as you can see on the chart here, bumping up against the upper boundary line here, you're correlating to highs we had, whether you back it up to July, you back it up to the high we had in April, you back it up to the highs we had in February, you back it up to the highs we had in November of last year. You can see pretty well defined. And on the bottom side of that, whether it was January's pullback, March's pullback, May's pullback as well, we have not come close to the boundary line on the low side. Google, been one of the strongest companies out there. But just keep in mind, we're talking to Kevin Hincks yesterday. You can love a company, folks, but at some price point, there's always going to be a price where I might be selling a company or buying a company, because you can be overbought and oversold, and maybe Google at least bumping up to that boundary line. And you're talking about where could we potentially go from there? How about a Fibonacci retracement number off of the May run? That 382, 2659, matching the lower boundary line. Just be a natural pullback for Google. Maybe we get a little pullback in the tech stocks as well. Thanks for tuning in, folks. Stay tuned. Basil Chapman's up next. Live programming all day at TFNN. Be right back, folks.